Hi, I'm David Calloway, Editor-in-Chief of USA Today, and with me is John Wagner, USA Today fund management columnist and Wall Street expert, to talk about the stunning news earlier that Pimco's Bill Gross is leaving the company to go to Janus in Denver, Colorado. John, coming after the big Yankee game last night, this is like Derek Jeter saying he's not going to retire. Instead, he's going to join the Colorado Rockies. What's going on here?
Well, that's absolutely right. And when I first saw the press release, I had to call the company to make sure it wasn't some kind of practical joke. It's a stunning thing. Bill Gross built Pimco from nothing, really, to a $2 trillion bond powerhouse. Tim Geithner and Ben Bernanke would call him regularly. He's one of the most quoted people on Wall Street. For him to leave the company that he began and to go to a smaller, really more obscure firm is just stunning news.
Now, Pimco's obviously had some problems recently. There was a big rift between Gross and Mohammed El-Erian, which resulted in El-Erian leaving last year. There's been some SEC investigative stuff going on recently this week. What does this mean for Pimco? Their shares are getting hammered. The funds are seeing fire sales, investors rushing for the exits. What's it mean for the future there?
Well, you know, it's a big departure, and for anybody who owns a Pimco fund, it's time to think about whether the reason you bought that Pimco fund is still there. For most people, the reason they bought that Pimco fund is Bill Gross, who was the mastermind behind almost every fund that they own.
I mean, he really was Pimco. I mean, talk about the culture of the personality.
Oh, he was Pimco. He would chair all the investment. He was the chief investment officer, and that was part of the problem. Was you know, someone described a good portfolio manager as an accountant with a chip on his shoulder, right? And so this is a guy who really knew his stuff, but he also had a tremendous ego, didn't stand for anybody else's opinion terribly well, and that drove a lot of good talent out of Pimco.
So does El-Erian come back now and take over?
You know, I wouldn't be a bad bet. You know, I mean, he had a good gig there. He's widely respected. He's a smart guy too. Now, I don't know whether he's got the bond trading chops that that Bill Gross does, but Gross's chops were kind of off in the last year and a half. He hasn't done as well as he has been doing.
There is some chatter out there that he's not going to come back to Pimco, and I think Pimco said they'll name a new chief investment officer, but it is juicy to speculate.
Right, and what is odd is that, you know, this guy leaves, Pimco, the founder, the chief investment officer leaves, and Pimco puts out a statement saying, yeah, we'll name somebody really soon.
Yeah.
You know, really?
Now, almost as stunning as this is where he's going,
right.
Janus.
Right.
I haven't heard anything from them in, about a decade.
And
it's an equity house, right? Not a bond house.
Exactly right, and there's a reason you haven't heard from them is because they've been quiet. They were a big deal in the 80s and 90s during the big technology run-up. They were a powerhouse. They had great fund managers. Tom Marsico, who went off to found his own fund company, and a couple others who all left, you know, in the meltdown. Then they were investigated in 2003 and fined heavily in 2004 by the SEC during the mutual fund scandal. They've had some turnover in their CEO ranks. And you're right, they're an equity house. They're a bullish growth equity house. That's what their name has been made in. And for them to suddenly say, time for bonds, is a little odd.
Now, Bill's a Newport, California type of guy. Is he going to move to Denver?
Well, that I don't know. I do know that the CEO of Janus is an old Pimco guy. He was he was there since 1996. They know each other well, so there is some synergy there. But, you know, one of the things Bill Gross is probably going to miss is the fact that, you know, he had this vast trading staff and mechanism behind him at Pimco. And, you know, he had this trading desk that was, you know, the size of a football field, you know. And he's going to go to a smaller company with less resources. Maybe that's what he wants. But I have to say, you know, maybe that's going to be a drawback for him, too.
It is a stunning turn of events.
Absolutely.
I have to ask, if you're a bond investor, is this the final straw in the bond bull market?
Yeah, you know, I was thinking about that because, of course, there's really not a lot of room for interest rates to do anything but rise, right? You know, I mean, okay, they could go down further, the German 10-year rates at 1.6 or something, but, you know, there's not a lot of room left for a big bond bull market. It started in 1981. It's been going on for years. It's going to be a tough environment to make money in bonds in the next 10 years. And I have to say, you know, you probably do want a really good bond manager if you're going to be in a bond fund, but you also have to ask the question, why are you in a bond fund at this point? And to be honest, I think you'd be better off in many cases just in a money fund. You know, at least rates will rise, you'll get a nice yield as things go up.
Well, funds are rocking today. Pimco shares are down, Janus shares are soaring. Keep following John as he writes about this developing story on usatoday.com.